Bitcoin mining difficulty's record-setting streak shows no signs of stopping. The difficulty of mining Bitcoin is poised to set a new all-time high this week as miners continue to deploy new mining machines to cash in on recent spike in revenue. The Bitcoin mining difficulty, a measure of how easily miners can discover a block of Bitcoin, is set to surpass the 50T mark on Wednesday, setting a new all-time high, and it could continue to grow further. The rally in Bitcoin prices this year and rise in popularity for the Ordinals protocol has led to better profitability for the miners, and miners are continuously deploying more mining machines as planned. These factors contribute to more computing power, which leads to record difficulty levels. The Bitcoin mining difficulty adjusts automatically as the more computing power, or hash rate, gets added to the network, in order to keep the time required to mine a block stable at about 10 minutes. New generation machines will continue to get plugged in as rack space is made available, said Ethan Vieira, Chief Operating Officer at mining services firm Luxor Technologies. Meanwhile, the popularity of the Ordinals protocol has led to transaction fees 3 times higher than normal, adding to miners' revenue, Vieira said. Ordinals enable additional functionality on the Bitcoin blockchain, such as non-fungible tokens and other coins, which in turn increase the number of transactions, making mining a block more profitable. An increase in difficulty means a decline in profitability for miners because their chances to win any single block and bring in revenue become slimmer. Marathon Digital Holdings Mara, one of the biggest miners, noted that its monthly mined Bitcoin was lower, month-on-month, as difficulty rose in April. Similarly, Canadian miner Bitfarms BitF's fourth quarter slid to a loss due to higher difficulty. However, a few events could dampen the growth of the hash rate. The lack of positive Bitcoin price movement and constraints in available infrastructure could be some of those catalysts, according to Tim Rainey, treasurer at Greenidge Generation Holdings GRE. Uncertainty around the next Bitcoin halving event could also slow down the increase of mining difficulty, according to Charles Chong, Senior Manager of Business Development at Foundry. Foundry is owned by CoinDesk's parent company, Digital Currency Group. Meanwhile, having too much hash rate in one region could also affect the growth of the Bitcoin mining difficulty, as it may change how mining rigs are deployed. Given the concentration of hash rate in North America, we are seeing new seasonal trends, said Colin Harper, Head of Content and Research at Luxor Technologies. Previously, the hash rate would increase during China's rainy season when cheap hydropower was plentiful. Instead, now, when summer heat waves sweep through the U.S., miners power off their machines to save the energy required for cooling.